Well, if you look at the fatalities in this episode, I mean, you got less than 3% in terms of mortality rate for the Wuhan virus. But in the case of SARS, the mortality rate was, about 10%. So this is this is less deadly than the SARS virus. It's probably more infectious, which is why I'm not surprised to see so many cases. But the silver lining is also that you've had people who've, gotten this virus and have recovered. You've had 3 cases in Thailand, you've had cases in Japan, they've recovered. So there is light at the end of the tunnel, and health authorities are more prepared.
So that's a silver lining. Also, from what we know, there haven't been any local transmission cases, meaning that for those who have it here in Singapore, for instance, have come from Wuhan, have come from the province of Hubei.
That's right.
So that's been read as an encouraging sign too. But what you said about it being more infectious, more contagious, we have to take into consideration as we evaluate the impact on the market, because that could have some implications for what happens to big consumer names, don't you think?
No doubt. And I think, it will have an impact on the economy. But, this episode will come to pass. This is temporary. It's transitory. And I think, it will rattle the markets, but it will not derail the markets, will not cause the markets to plunge, I think. If you cast your mind back to SARS, it caused the market to fall by about 14% in terms of global equities. This time around, the fall may not be as significant.
What else is looking good to you? Because we spoke about how you would want to right now, for the very short term, avoid consumer-oriented themes, especially themes to do with travel, tourism, airlines, etc., hotels, those businesses. But the fact is, once the dust settles on this issue, there could be great opportunities on the rebound.
That's right.
So at what point in time do you take that call to say, okay, enough is enough, this is close to the bottom, if not really the bottom?
Well, I think when you see a 10-15% correction in prices...
But we've seen that already
in
a lot of these names.
Yeah, in individual stocks. But of course, things are still playing out. I think you want to make sure that the rate of infection is starting to show some kind of peak. We're not there yet. It's still playing out. The news headlines are still playing out. If you go back to what happened with SARS and other virus incidents in the past, it takes about 3 months, perhaps 4 months. So it's still early days, still too early to bargain hunt. I would wait for at least a couple more months before I really think about, dipping my feet in the water, because, things are still playing out. We're not sure how, what the infection numbers are going to be like.
Are you still investing? I mean, what do you like in the fixed income space?
Well, we like high yield bonds. We think that, that's a segment of the market that looks interesting because interest rates are very low right now. We see them remaining low. Central banks could even cut rates on the back of the Wuhan virus and if other economic risks present themselves. And so, investors are looking for yield. And high-yield bonds clearly will be a place in investors' portfolio.
Do you think in the emerging markets as well, we'll see central banks take on perhaps even more of an easing bias?
It is possible. It is possible. Okay. We think that central banks in the emerging markets could take on more of an easing bias. The developed markets, they've already eased significantly. Interest rates are negative in Japan, interest rates are negative in Europe. How much more can they take it lower, right? But in emerging markets, there's room for rates to be cut further. Some of the central banks may take it further, and that will make emerging market high-yield bonds more attractive. But I think the search for yield story is going to go on for the next 2 to 3 years at least, and the high-yield segment is, I think, something investors should have in their portfolios.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.